right, what up, dude? You know, it's your boy. What's going on with the camera? Slide over there. It's all good. All good. All right, so yeah, we're talking about some third party, secondary credit bureaus other than TransUnion, Equifax, Experian. You know, everybody knows those three, but there are plenty more of third party bureaus and that whole public records that kind of partnered with these main three, and they pull data from other sources and relay it up. And then when the banks pull your information, they got all your data and all the information tied to a certain address, tied to a certain phone number. And when you're building out these profiles, you do not want those certain profiles to merge. So you need to know what data is what, freeze which ones, know how to opt in, opt out of which credit bureaus. And I'm going to give you all that sauce, all that information right here on this live. Also, if you got any questions about credit, questions about opening up a business, crypto, investments, anything financial, I'd like to give my point of view of it, sort of like Dave Ramsey style, answering questions for you guys. Is you solicit your questions. I give you my take on the situation. I am not a financial advisor. It's not financial advice. You just giving my point of view of things, how I go about building wealth and building top tier credit, getting to the money, and getting to the next level and level up in life. All right. If you like the information, hit that like and subscribe and hit that notification bell. It helps out the algorithm and gets me out to a wider audience. And if you want to drop a Cash App or a little jam for your boy, drop a little something on me. I appreciate that. So where y'all checking in from? Anybody from Atlanta? Anybody from Detroit, Texas, Dallas? Who we got watching? Go ahead and drop your questions. Let's get into the top third party. All right. Fantasy football. Third party apps, secondary credit bureaus. Let's get into it. All right. So here we got first one, Clarity. They're part of the Experian network, clarityservice.com. Giving y'all the sauce, giving y'all these websites. A lot of people don't do all this. I mean, it's really not hard to find. Quick Google search. Quick, third party credit bureaus, different type of credit bureaus, different type of public records for your credit. Things you can play around with in AI, Chat GPT, play around in Google. Yes, sir. Detroit rated me, Atlanta paid me. What it do, my dog? What up, Doe? What y'all saying, Detroit? My Detroit player. But yeah, man, just dropping some sauce, dropping some game. Most people know about CP, get building a profile, but they don't know the extra little things that help get your credit profile, in the right hands. Lack of better words, in the right credit bureaus, so they can pull and know what's going on. So you can freeze your report. So if you're, building your credit, if you're doing credit repair, you want to freeze your report, opt out of your personal credit. Especially if you're building your CP, building your secondary profile, you don't want those profiles to merge. You don't want them finding any other information. So you go ahead and freeze and opt out of your bureaus. Next one, we got Microbuilt. Microbuilt is more on the business side. So there's another way you can build your profiles is by attaching them to a business, and using these companies called Microbuilt will help you get into different business databases and help solidify your business as well. Next, we got Factor Trust. You can opt in and opt out right here in Factor Trust. Now, the key to Factor Trust is you got to start waiting. You can't just hop right in. Can't just hop right into these bureaus. When you're building out these profiles, you can't do everything the same day. You got to start waiting a couple of days, waiting a couple of weeks even, in between applying, going to different credit bureaus, uploading your data, getting inquiries. You know, starting to raise a lot more red flags, doing a lot of things the same day. As these bureaus collect your data, they can see when it's coming in. So if they see a bunch of data coming in the same day, that raises a red flag, and it starts to flag your profile, and you start looking like a fraud risk, and you start to seeing where you can't just quickly apply and get approved of things. You're starting to have to put in a little bit more information. Let me get this Justice camera real quick. Things moving all over the place. All right. There we go. There we go. All right. So how my levels, man? We got my Detroit player. Any more questions, concerns? Shout out your city and state, man. I don't know where you guys are checking in from. That's a couple. The next one we got is called Data X. I need to put that one on the thing. Data X. Company based out of Dallas, Texas, and Vegas. Let me show y'all that one. Show y'all Dallas X. All right, so here's Data X. It's another Equifax company. The other one was now Clarity was Experian. This one is tied in with Equifax. So it's another database where Equifax pull your data from, so you can freeze this one, freeze your main report, and then opt in. Now I don't see an opt-in form on this one, so you may not be able to opt in, but you can opt out of your personal credit and freeze those third-party bureaus, and it helps you build your secondary profile. All right. Here's the freeze form. Here's the opt-out form. Right here, you can call, you send in a letter, and looks like you can do it electronically. No, this is the form. You got to actually mail this in. So no shortcuts. You got to do a little work, but definitely worth it. Incorrect reports. Let me see what they do. Okay. So if you got some incorrect information, you can also send it in as well. And they give you a free credit report. And download a request form just like ta-da. All right, we got a couple of more. Next one, some of y'all probably heard of this one already. Innovis. Now, Innovis is pretty much opt-out pre-screen. It's pretty much the same thing, but they have their own website where they do personal and business databases. So if you're looking to get your information cleaned up or information out there, go through Innovis. But opt-out pre-screen is the top company you want to use to opt out of your personal or opt in if you're building a new profile and you want to get access from the credit bureaus to see your information. You want them to find you. You need them to find you. That's the only way you're going to get applied for credit. All right. Just giving y'all some free game, giving y'all some information right now. Got about 5 databases so far. We got another one. A lot of people heard of this one as well. It's called Check Systems. Spell it checks just like that nasty cereal. And then you go to checks. So check system is, tied in with banks. So if you ever tried to turn 200 into 2,000, man, you can't get a bank account right now. You're in the check systems. So you want to get out the check systems. So this is one of the websites you want to go to. to get out of the check system or freeze it or opt out, and it will help you get approved for another bank account. Now, there's some other databases that tie in with that. So not all banks and credit unions do check systems, but some of the big ones do, and this is a way to help you get another bank account. You dig? What up, my boy? Detroit. You say, my CPR rate tremor, can I just keep boosting public records before the opt-in and secondaries? Yeah, you definitely want to keep boosting it with public records regardless. You know, try merge, you want over 100 public records, 200 public records. There's no limit on public records, but just kind of get tired of doing the same thing, typing in that information, or you can pay somebody. If you don't want to do that, really, I don't do no more than 12 for the most part, really, in the first beginning, and then I may pay somebody as time go on when I want to get higher limit cards and bigger limit cards and get proof of more things. But as I first start off building a profile, bro, I don't even do too much. I don't try to spend too much money, spend too much time doing these public records unless I pay somebody to do a bot for me or pay somebody to add a bunch of public records for a client. If I'm doing one for a client, then I might, do them all first before I opt into the secondary bureaus. But all of it is kind of tied in. All of it is tied in together. Like I said, you don't want to do everything all in one day. Nowadays, you want to space these things out. So, I kind of saw making magenta profile in one day, then maybe wait 2 days and, do some credit pulls and wait another 2 days to do some of these secondary bureaus and some of these public records. Just kind of space out the information. And we're having a lot more success that way. We're getting some approvals. You did. Appreciate the question, man. It's a good question right there. All right, so we got check systems. You can freeze, dispute. Where I usually go to dispute part or submit an opt-out form to get out of here. Can't really opt in to check system. This is more of an opt-out once you already got in trouble with the bank. But getting a bank account is pretty easy. It's more getting approved for loans. It's the hard part with these new profiles. Let's check system. Show what we got. Factor trash. Oh yeah, Core Logic. Last but not least, we got Core Logic, which they changed their name to Cotality. The hell is this? Credit Coality. Yeah, credit card. Yeah, you can book a consultation. We put the consultation banner back up there. You can book a consultation with me at Credit K. At Credit K for the consultation. CreditK.com. You want to go straight to my booking website, CreditK.com. Go straight to my booking website, and you can get a whole hour for $50, man. We talk about everything. I get a whole sauce, get the whole play, A to Z. Well, I'm starting up doing my mentorships coming back up in December, going into January 2026. A lot of people need to learn some ways to make some extra cash out here. Supplement the income if they can't find a job, the way to make some money, period. I'm definitely going to start back my mentorship. Show y'all a couple of ways to hustle. Show you a couple of ways to get some money out here. Turn the lemons into lemonade. Real talk. All right. And then, but last but not least, here's the last website, last database called Cotality. Core Logic, now Cotality or Credco. go by a couple of names, but you can come here, go by phone, and obtain your credit report, do a freeze, opt out, opt in, and they're tied into all three databases as well. And that's CredCo or Cotality.com. All right. Yeah, so that's the feature presentation. Now we just going over whatever y'all want to go over. Any comments? I'm asking about the consultation. Yes, sir. But the consultation, creditk.com. Creditk.com. Oh, shit, what I do? What the hell? Yeah, this thing get so small like this. I get me a new streaming software. There we go. All right. All right, any more questions? Sorry about that little pause. That was very unprofessional. But we got 3 people watching. Hit that like button, hit that subscribe. Go ahead and drop a question in the comment. Anything you ever wanted to know about CP, building profile, building business credit. Give y'all the sauce right now, man. I'm chilling on a Friday afternoon. Wait for some money plays to pull up. So we're going to stream. And, whatever y'all want to talk about, man. With these current events. Let's see what we can cover. I did a little something on YouTube I wanted to cover. I wanted to talk about. Let me find that. So I think about these 50-year mortgages. Oh, look at me right there. Look at me on the live screen. The live streaming. So did I save it? Did I save the channel? It's a quick little 5-minute video, man. Let's talk about this.
It's no secret that buying a house is expensive. The average sales price for a U.S. home has hovered around $400,000 since the end of 2021. For most people looking to cover the cost, that means taking out a loan. And that means letting a bank pour over your financial details, your salary, bank balances, retirement account, all to determine how much you can afford and how risky it is to lend you the money. And if you're among the 15% of Americans who invest in digital assets, you haven't been able to include them when applying for a mortgage, but that could soon change. A June directive issued by the Federal Housing Finance Agency ordered mortgage giants Fannie Mae and Freddie Mac to develop proposals to consider crypto as an asset in single-family home risk assessments.
It helps normalize crypto, helps to legitimize cryptocurrency, which I think helps the president's agenda.
I think you got to take it as political more than substantive is the way I would put it.
Regulatory uncertainty, volatility, and the inability to easily verify reserves has kept most crypto out of the mortgage underwriting framework. But that could all change with this directive, a landmark shift for the U.S. housing finance system.
The lender would look at the assets that a potential borrower has, and before they might have only considered stocks and bonds and those traditional kinds of investments, but now they would consider those less traditional cryptocurrency investments. And
okay, so what they're discussing is Trump administration and even going back to the Biden administration, for certain with the idea of allowing crypto to be used as an investment and counting towards the purchase of a home. Many of these homes are FHA backed, federal government backed loans. So, the government has a vested interest of getting these loans paid off. And with so many people, investing in crypto and owning Bitcoin as an asset, using that to pay for it is a way of the government getting a hold of the crypto and getting people into more homes. That's one of the big things that this administration is trying to push. So, you guys are interested in using crypto or any type of asset other than, straight money like gold or stocks in exchange of paying off a mortgage, let me know. Comment down below if it's something that's interested in.
And it might be a bit difficult for them to assess the riskiness, but I think they're used to assessing the riskiness. There are stocks that are even more volatile and risky than some long-standing cryptocurrencies. So I think for the lender, it would be pretty easy for them to adapt their framework to incorporate crypto into that.
The move from the FHFA found immediate backing from a Republican lawmaker in D.C. who introduced a bill to codify the directive into law. But the proposal from the federal lending agency also received criticism from those who argue backing loans with crypto could add new stress to the home lending market. So how would this directive work? What does it mean for mortgage lending? And will it become law?
Nah, we ain't getting sponsored by them, but so these new laws, like I said, the FHA coming down, bills are getting signed, new legislation is put into place. It looks like could be a real thing. I own a substantial amount of crypto, something that could be used to my advantage, but I would use it in a different way. You can actually borrow against your crypto instead of actually using it in exchange for money and giving away your crypto. You can borrow against your crypto at a cheaper rate than some of these mortgages are giving you, and then pay back the crypto loan over time and still hold your Bitcoin, or as crypto goes up, it kind of pays for itself.
FHFA Director Bill Pulte signaled a new era of crypto integration into traditional financial infrastructure when he announced the lending agency's new stance on digital assets. The order directs mortgage giants to develop proposals that include digital assets without requiring borrowers to liquidate them into U.S. dollars before a loan closes. In late June, Pulte said in a post on X that after significant studying, he ordered Fannie Mae and Freddie Mac to prepare their businesses to count crypto as an asset for a mortgage. He added that the development aligns with President Trump's vision to make the United States the crypto capital of the world. A couple of days later, Pulte joined CNBC's Money Movers, where he discussed the proposal and weighed in on whether this could potentially introduce new default risk, given crypto prices are more volatile than stocks and bonds.
The first thing that we did when we talked about this was do no harm. Do no harm. And so that will be the approach by which Fannie and Freddie and their respective boards take as it relates to this issue. I feel very confident that we have very good people that understand that we need to make sure that safety and soundness is intact. And I can tell you one thing, we are going to be very focused on the volatility of crypto and whatever assets may or may not be included in being recognized as collateral. This is further evidence of why the Fed needs to lower rates, because we are trying to do everything we can to increase affordability. And one of the reasons that we are doing this with regard to crypto is because crypto has an enormous opportunity to help with the affordability equation. I mean, Bitcoin is a very stable asset in our view. Obviously it has volatility, but a lot of assets have volatility. A lot of people have a lot of wealth in Bitcoin. And so we want to make sure that people have access to the American dream, and we're doing everything we can.
Under the guidance, only digital assets held on U.S. regulated centralized exchanges will qualify. On top of that, Fannie and Freddie must design safeguards to account for crypto's volatility. The government-sponsored enterprises must also submit their plans to the FHFA.
Fannie Mae and Freddie Mac can set guidelines. They may have to haircut the assets if they're going to count them towards your assets as a purchaser of a home. So you come to them and say, my income last year was X, and by the way, I have $10 million worth of Bitcoin. They have to decide how much of that they're going to count towards the credit assessment. But more importantly, your lender has to decide whether or not they want to deal with you at all. And that is the other piece of the puzzle that, frankly, FHFA can't force on the industry. Each bank, each lender has to make that determination.
Now, the FHFA can't force the industry to take on this new initiative, but Fannie and Freddie are the largest purchasers and guarantors of mortgages in the United States. The two corporations back around 70% of all mortgages in the U.S. The proposal needs to be approved by the boards of both Fannie Mae and Freddie Mac, both of which are chaired by Bill Pulte.
There are some lenders right now that are willing to do business based on Bitcoin. Not so much the other tokens, but I think Bitcoin is way in the lead in terms of getting this kind of recognition. So it's possible to do it today, but that's mostly in what we call the private label or jumbo market. These are not mortgages that are going to be sold to Fannie Mae or Freddie Mac.
We asked the experts, and this is what the process involving crypto would look like through the lens of someone hoping to get a mortgage. When you apply for a home loan now, the bank wants to see all your assets to determine how much money they should give you. If you want your crypto to be counted towards your eligibility for a mortgage, you would have to submit documents to your lender that show your crypto assets, how long you've had them, and their value. It would then be up to the lender to incorporate those factors into their assessment and weigh them appropriately.
It would work pretty similarly to how it works right now. You show your assets, you show your bank statements. Maybe now you would show your crypto portfolio as well if you wanted that to be counted. But you don't even necessarily need to show that if you didn't want to. I don't think it would be a make it or break it in terms of getting qualified for a loan for most people, because I think banks still would want to see reserves that are held in safer forms like stocks, bonds, or cash. But maybe it'll help slightly on the margin, especially for people who are all in on crypto.
All right, so that's it. If you're all in on crypto, there's a way to now be afforded to get a home and use that to get qualified for one of these loans. Now, like I said, it's been people out here that's taking them. They're more in the private sector, hard money lenders, private lenders, private institutions. But like I said, if you want a federal bank, Fannie Mae, Freddie Mac, federal bank loan, then these new bills that's coming down the pipeline will help. Let's get into a couple more minutes of this.
Not everyone is on board with this new directive. Over the summer, a group of Democratic senators took issue with the head of the country's housing finance agency on its, quote, risky proposals to allow unconverted crypto assets in mortgage loan.
It's always a hater. It's always some legislator on either side of the aisle, Democrat or Republican, that's going to block it, that doesn't understand it, that doesn't trust it. I'm not sure why. What do they get out of this? Who's paying them? Who's in their pockets to stop people from allowing you to use crypto?
Underwriting. The 5 senators, including Jeff Merkley, Elizabeth Warren, and ranking member of the Senate Banking Committee, Chris Van Hollen, sent this letter to Pulte requesting information regarding his directive to Fannie Mae and Freddie Mac. The senators expressed concern that crypto is more volatile than traditional assets and stressed that Congress and the public should better understand the agency's decision-making process to assess the potential risks and benefits to the order and the implications for the housing market.
I think that we should be worried about risks in the mortgage market. I mean, that's what caused the financial crisis of 2008. But I think that crypto probably isn't going to be what brings down the mortgage market this time around. And especially if those crypto investments are weighted based on that risk, then that should account for it. I don't think that you can say that crypto as a whole is going to be a problem as long as the risk is properly accounted for. So if anything, I would want to see, what those guidelines actually entail to make sure that the crypto is being properly down-weighted based on its volatility.
And to offer more guidelines, Senator Cynthia Lummis, chair of the Senate Banking Committee's Subcommittee on Digital digital assets, showed her support for the plan by federal housing lenders to use crypto in mortgage underwriting. On July 29th, she introduced this bill, dubbed the 21st Century Mortgage Act, which would require government-sponsored enterprises to consider crypto when assessing single-family mortgage eligibility. The legislation would direct Fannie Mae and Freddie Mac to include digital assets reported on a decentralized digital system that stores transactions as part of their mortgage risk assessments for single-family home loans. The bill would prohibit forcing the conversion of these assets into dollars. Senator Lummis said that the legislation embraces an innovative path to wealth building, keeping in mind the growing number of young Americans who own digital assets.
The vast majority of people who own digital assets are people who are also first-time home buyers. And in this environment, buying a home is almost cost prohibitive. What we're trying to allow people to do is when they show their net worth for purposes of qualifying for a loan, that their digital assets be included as assets on their balance sheet. So they have that equity to prove up their worthiness of having a home mortgage.
Some experts think this new guidance is a long shot.
I think that it's going to be very difficult to get most of the major lenders and banks to accept cryptocurrencies as consideration, because obviously there's some market risk between the time the crypto comes in and the time you turn it into fiat paper dollars. Because remember, the mortgage market ultimately is about a lender helping you buy your house, and then they sell that loan into the bond market. That bond transaction is in dollars. That's the way mortgage-backed securities work. The entire complex of banks, non-bank financial companies, the clearing system, the Fed, is set up for dollars. That's all it's set up for. So I think the big advantage today, if you have a lot of wealth that you've accumulated in crypto assets, you can use that wealth to qualify for credit. You can use that wealth in a lot of interesting ways, and you can borrow against it. There are a lot of broker dealers out there that will make you a loan on your crypto, and they'll go up to 80-90% of the face amount.
And if this guideline takes effect, who's the best candidate?
It would be these crypto advocates who don't have their savings in traditional assets, but do have them in crypto.
Yep, that's it. That's me. I don't have my money saved in traditional assets. A lot of it's tied up in stocks. A lot of it's tied up in crypto. Some in inventory. Some tied up in businesses. Stake in a couple of businesses I have. So my money is everywhere, and I would like to get approved for a home loan very soon. I am going the more traditional route, and I do have opportunity to apply with some W-2 and some more traditional job income over the next year. So hopefully that will be a factor as well. But with these new laws and new things with zero credit score loans, they're not factoring credit scores at all. 50-year mortgages. They're doing a lot to get you in a home. So come in the future, a lot of these things that prevented people in the past from getting approved will now be the problem. And, but the cost of homes will going to go up and triple as more and more people are able to get approved. Inventory is going to be less and less as people do buy homes. Of course, the rich are going to take advantage of this first, and then upper class, then middle class. And it'll trickle on down to some people as well. But the question, do you own enough Bitcoin to pay for at least half a home? Average home cost in America is about $189,000. And could you pay for at least your $90,000 worth of crypto in your portfolio and stocks? Let me know. That'd be a nice down payment. But really don't need about 30% to put down on a home. So that could work as well. All right, but that's a little video I always want to cover about crypto and getting a home loan with your crypto and everything. Got this full screen. Thought it was an interesting little video. That's the information. I'm going to start doing these more live stream and covering these type topics, as well as giving y'all information, giving y'all these games, giving y'all these gems about building these profiles, man. You know, I'm well versed in a lot of things, not just credit. We can talk about a lot of different traditional assets, a lot of legal things, a lot of ways to make money, not just these hustles and scams that you see most people on YouTube trying to promote. There's real legit ways to make money, to get approved for these credit cards, to start these businesses, and start need-based businesses right now. We need need-based businesses, t-shirts, hairdressers, wig specialists, eyelash techs. All that's cool. People need those services, but we need some real businesses. Start open up some laundromats, some little small grocery stores, temp services, find people some work. That'd be a great business. That's what I should do out of here. Start getting some contracts, some daily work. Start having people meet up here and handing out these contracts. All right, man. Finna get off the live stream. Can I add a live stream? All right, man. Yeah, let's appreciate to my Detroit player, man. I'm finna get up out of here. I'll figure out the rest of my day. Go find me something to eat, man. But yeah, I'm gonna give y'all some more game, give y'all some more gems. Y'all stay tuned. Chop this video up, drop it on the channel later on. Yep.